Tesla's Q2 revenue grew 26%, but its operating profit fell 57% in the same 3 months. That means out of every dollar that came in, the business kept about 1.4 cents. If you hold Tesla or you are waiting to buy this dip, that 1.4 cents is the whole story. While the sales record was real, what little profit was left did not even come from selling cars. It came from a stock Tesla owns in SpaceX. I read the release and earnings call twice to be sure. The headline says best quarter ever. The numbers underneath say something very different. Tesla's operating profit, the money it makes from running the business, was $398 million. On 28.2 billion of sales, that is 1.4 cents on the dollar. A year ago, operating profit was $923 million, sitting at a 4.1% operating margin. So it did not just shrink, it almost turned a profitable company into a break-even company. I have a master's in aerospace engineering, and when I see a mismatch this big, I have to stop and find the root cause. The reason is not the cars getting cheaper. Tesla actually made more gross profit than a year ago. The reason is spending. Operating costs rose 47% in 1 year to $4.35 billion. Revenue only grew 26%. So the costs grew almost twice as fast as the money coming in. Most of that was research and development, which rose 49% to $2.4 billion. There is Optimus, the Cybercab, the Tesla Semi, and the computers that train the self-driving software. None of it is sales at scale yet. And inside these costs, stock-based pay almost doubled to $1.15 billion. Most of it Elon's new pay package approved in 2025. So the car business earned good money this quarter. Then Tesla spent almost all of it on things that do not make money yet. Every extra dollar went into things not selling today. Which year do they start paying you back? Tesla still reported a profit anyway. Almost all of it came from one line that has nothing to do with cars. The official bottom line number, GAAP net income, was $1.114 billion. That looks healthy, and it is the number most headlines used. But pull it apart, $763 million of it was an after-tax gain on the stake Tesla owns in SpaceX. Before tax, the gain was $1.005 billion. Tesla did not sell a single share. The share rose in value, so Tesla recorded that rise as a profit. But it is profit on paper, not cash in the door. There is a second piece. Tesla also booked a one-time tax benefit of $274 million. That does not repeat next quarter. Take both out, and the real repeatable profit is about $77 million. On 28.2 billion in sales. That is what the business itself earned this quarter. $1.114 billion on the headline, $77 million once you strip the one-time items. Which number are you buying the stock on? So look at what Tesla is spending all that money to build. You can see it in the factories themselves. Put this quarter's capacity report next to last quarter's. The car factories barely moved. Same lines in California, Shanghai, Berlin, and Texas. What changed sits at the edges. The Cybercab went from a pilot line to a real line rated for $185,000 a year. The Tesla Semi factory moved into commissioning. A new Megapack battery factory in Texas moved into commissioning. Tesla is not adding car capacity. The new lines are for robots, batteries, and chips instead. And the biggest change is one line that used to build cars. Optimus is the bet the whole company depends on. And on this call, Elon was honest about how hard it is. He called it the hardest product to scale manufacturing that we have ever made, because there is no supply chain. Every part is new. He said the early production will be quite flat and long. The first robots will not be sold. they go into what Tesla calls the Optimus Academy to practice tasks and collect training data. Real volume in Elon's plan waits for a later robot, Optimus 4, aimed at 10 million units a year. Today, Tesla is building the line, not the robots. Let me be fair. Real suppliers are betting real money next to Tesla. Samsung and TSMC building chip plants and Panasonic expanding batteries, and Elon has turned this kind of bet into a real business before. But the timing is the whole point. Tesla just replaced a line that sold cars with a line that sells nothing yet. How many years is that trade? If this breakdown is useful, hit like and subscribe. I go 3 layers deep every week. Now the part of the report Tesla wanted you to look at, the energy business. On the surface, it looks great. Tesla deployed 13.5 gigawatt hours of batteries, up 53% from last quarter. One of the best quarters that business has ever had. But go to the profit. A quarter ago, the energy business kept 39.5 cents of profit on every dollar. This quarter, it kept 20.4 cents. The profit margin was cut almost in half in 3 months. Why? Tesla's finance chief gave 3 reasons. First, a $240 million charge to fix battery cells from a supplier. Second, a tariff benefit worth more than $200 million last quarter that did not repeat. Third, Tesla is charging less for its big industrial batteries as more competitors show up. Here is the part that matters going forward. That 39.5 cents last quarter was never the real number. It was propped up by one-time help. Tesla's CFO said the energy business should settle in the low to mid-20s. So the bright spot everyone points to is smaller than it looked. The number they show you was 39.5 cents. The number they guided is the low 20s. Which one goes in your math? On April 22, 2026, on a live earnings call, Elon admitted something Tesla had avoided for years. The computer in about 4 million cars, called Hardware 3, can never fully drive itself. His exact words, "I wish it were otherwise." Those owners had paid up to $15,000 for full self-driving, a feature the car they own cannot run. Now watch what happened this quarter. On July 22, 2026, on this call, Elon changed course again. He said Tesla will upgrade those cars, swapping in a newer computer for almost any car with cameras. Still no price, still no date. That is the pattern, and it is the whole story of this stock. A promise. Years later, the admission it cannot be done. Then a new promise to fix it. Full self-driving was first sold in 2019. It is 2026, and it is still not finished. Now Optimus, the Cybercab, and the chip factory are the new promises stacked on top of the old one. They paid for self-driving in 2019, it is 2026. What year does soon actually mean? Even the sales record fits the pattern. Elon said Model Y is the best selling car in the world, which is true for a single model. But look at the trend on pure electric cars. BYD outsold Tesla every quarter of 2025 and won the year. Then in early 2026, Tesla clawed back the lead for one quarter, 358,000 to 310,000. This quarter, BYD passed it again, 557,000 to 480,000. Tesla only stays on top of the best-selling line by counting one model instead of all its electric cars. So here is where it lands for the stock. People do not buy Tesla stock for the cars anymore. They buy it for 3 things: self-driving software, the Robotaxi, and Optimus. Of those 3, only one earns money you can actually measure: the self-driving subscription. Let me do the real math with you. Take note, this is my own projection. I assume 200,000 new subscribers a quarter and no cancellations. Tesla has 1.48 million people paying for full self-driving, but 55% of them bought it once up front. Only 45% pay every month. That is about 666,000 people paying $99 a month, which is about $198 million a quarter. Tesla ended the one-time purchase in February 2026. So every new sign-up now is a monthly subscriber. Take this quarter's pace, about 200,000 new subscribers, and hold it for a year. The subscription brings in about 257 million next quarter, then 370 million, then 376, then $435 million. Add it up, about $1.39 billion over the next year. Now put that against Tesla's total sales, which runs over $113 billion a year. Full self-driving is about 1 to 2 cents of every dollar. And that is the one part you can measure. The Robotaxi and Optimus earn almost nothing today. So for anyone holding Tesla, you are paying $1.2 trillion price today for $77 million of real profit this quarter and a stack of promises with no dates. And the numbers that would tell you if the Robotaxi actually works, Tesla leaves them out. It shows cumulative paid Robotaxi miles, now near 2.5 million, but never the money those rides bring in. And that mileage even counts Bay Area cars with a safety monitor still in the seat. It does not show the size of the fleet or how many Cybercabs it has built. Now, to be fair, Tesla does publish a safety report, and it looks strong. Cars using full self-driving had about 7 times fewer major crashes than cars driven with no driver aids at all. But read what it measures. It counts crashes, not how often the human had to grab the wheel to stop one. And it is the supervised system, with a person ready to take over, not the driverless Robotaxi. The one number that proves the car can drive itself alone, how often a human still steps in, is the one Tesla does not give. Look at the mirror on the same day. Google reported its results on July 22, 2026 too. Both companies just posted negative free cash flow for the first time in years. Both are spending record amounts on AI. Google $44.9 billion in one quarter. But here is the difference. Google's spending already pays. Its cloud business, which is its AI business, made $24.8 billion in revenue that quarter, up 82%, and $8.8 billion in operating profit, up from $2.8 billion a year earlier. That is real AI money coming in this quarter. Tesla's AI spending so far is a promise. Same record spending, same cash burn. One already earns it back, one does not. The one promise you can measure earns 2 cents on the dollar. What is the rest of the price paying for? 3 things I'm watching from here. 1. The self-driving take rate keeps climbing. Over 55% of new US buyers now add it. The number I want next is the one Tesla will not show. How many keep paying and how many cancel? 2. A real Cybercab in real use. Tesla is testing it on public roads and giving employees rides on its Texas campus. But no one is carrying a paying rider in the Robotaxi service yet. Watch for the first production count and the first Cybercab in the paid fleet. 3. Optimus reaching real production. Not a demo, a count of robots built and doing real work. The record was real, the profit was mostly a paper gain, and every number that will tell you when the future arrives is a number Tesla did not give. When Tesla delays the next fulfillment again, will you still be holding for the payoff or just holding for the next promise? So if you are holding for the payoff, there's one more pattern to check first. Tesla stock rallied every December for the last 3 years, and everyone is waiting for it to happen again. I checked whether it can run one more time. Click here to watch it now.